So good morning, everybody. Today we are going to learn about CDs and ALTAs. Can everyone see my screen first off? Perfect. All right. So, like I said, we are going to be learning about CDs and ALTAs, and I just chose one to start with. And so we are going to start with ALTAs. All right. So I am actually going to pull up what an ALTA looks like so you guys can see. And this is what an ALTA looks like. It does look a little bit different than the closing disclosure, which we will go over next. But I am going to go through kind of section by section and let you guys know pretty much what you'll find within each section. If you guys have any questions throughout the presentation, please let me know and I'll be happy to answer them. And if not, Tiffany will be happy to answer them. All right, so the first section that we are going to go over is this section right here, which is the information section. Up there, you will pretty much, just information in regards to the property. You'll find the title company right here, the property address, file number, which is very important to us. Obviously, we do many transactions a day, and this is kind of how we found our transactions. So your escrow officer name and all of that information will be right here as well. You'll find your borrower and seller. For this, we're just going to do test purposes. So my escrow officer thought of very festive names to give these buyers and sellers. You'll find the lender. If it is a cash deal, right here we'll say cash, as well as the settlement date and disbursement date. Your settlement date will be when the clients are actually going to sign, and the disbursement date is when the transaction is actually going to be closed and the money will be dispersed to all parties. Then we're going to bring it down here, and this is kind of what it looks like. So on each side, there's a couple different versions of an ALTA statement. We could choose how to, create these. If we just want a seller one, we are able to do just seller. If we want a borrower one, we are able to do just borrower. And this, just for demonstration purposes, is a combined ALTA statement. It is pretty much just a summary of exactly everything that is being charged. It is a receipt pretty much. The way it is sorted out is in debits and credits, and POC stands for paid after closing. Correct, Tiffany? Yes. So paid after closing. So anything that you guys say in the contract, any sort of things that will be paid outside of closing will be showing up in this column. Any credits and debits are going to obviously be right here and right here. And I am just going to kind of go through each one and, explain how they're taken out and what they mean. So in deposits, credits and debit section, you're going to have the purchase price of the property. As we can see, it is the purchase price is $395,000. And this is going to go in the seller's column as a credit. Credit is everything they are receiving, and debit is obviously anything that is coming out of their pockets pretty much. So they should be receiving $395,000 from the borrower. Notice it's in a debit here and a credit for the seller. You will also find the owner's policy, which is a title fee, I would guess. Correct, Tiffany? Yeah, that is a title fee. And then any seller or buyer concessions. Sometimes in the contracts it says, $2,000 will be, in this case, $2,000 is awarded to the buyer through closing. So that could be anything for their closing costs, anything to fix anything, to give them the leg up on the contract, anything like that. So any credits that they will be receiving will also be showed up in here.
Hey, Jade.
Next is prorations. And this is pretty much taxes and HOAs. So any homeowners association and any taxes that are due. I'm also going to kind of explain to you guys right now how taxes are due for those that don't quite know. In Ohio, taxes are paid in arrears. So pretty much taxes are paid 1 year behind the actual date. So in 2021, we are actually paying 2020 taxes. Each seller will give the buyer a credit for the taxes. And the idea of this credit is that next year, when taxes are due and payable for 2021, the buyer will take those credits that they got and pay those taxes. So for example, let's say your house is transferred in March of 2021. They are pretty much going to be, the sellers are going to give the buyers a credit for January, February, and the day up until closing, with the idea that when they're due and payable for March next year, that they will take that money and pay the taxes for when they lived there. So anyone have any questions on that? I know it's kind of confusing. You kind of got to deal with it a few times before, you know, it actually sinks in. Are there any questions on taxes?
Yeah, so you're saying it's the full year, not half a year. So if the seller is crediting the buyer in March, or up until closing from January through March, it was from 2020.
I'll kind of go back a little further on that and dig into it a little more. So typically your seller can always count on giving at least 6 months worth of taxes plus however many months until closing. So in this particular case, they prorated from July of 2021 through closing. So almost a full 6 months. In some cases, depending on the time of the year that your sellers might be closing, they could be giving the buyer a full year tax credit. So in this case, you'll probably see lower where we're paying the first half taxes or we are holding for them. And then they're giving them a credit for 6 months. So sellers should always typically plan on, you know, and if you're ever doing a net sheet through our net sheet app or anything, you'll see this. They're always typically going to give the buyer almost a full year's worth of credit for taxes because they're either paying the taxes that are currently due and then prorating for 6 months, or they're prorating for a full year. It just depends on the time of the year. Sometimes they might give them a year and a couple of months. If they're closing in February, they'll pay the first half taxes that were due maybe in February. They'll give them a credit from July of the year before, and then give them January and a couple of days in February credit. So a seller really should always plan on paying pretty much a year's worth of prorations to the buyer. Does that make sense?
Yes.
Okay.
Thank you.
Sure. Yeah. It may show differently, right? Like it might show we're paying half a year and we're prorating half a year, or we're prorating for a full year. But either way, they're usually giving the buyer credit for a full year. Also, too, in this section, you'll see, excuse me, if there are any other prorations to the buyer or to the seller. So oftentimes the seller will pay things in advance, like the HOA that Jade had referred to, or a condo association. Let's say we're closing in the middle of the month, but the seller has already paid their HOA for the month or their condo for the month. The buyer will actually give them back 2 weeks or however many days that the seller has already paid in advance. So those will oftentimes show up here in this section as well. So it might be things that are due, or it might be things that the seller has already paid and the buyer essentially is paying them back on paper for that.
Thank you. Any more questions on prorations before I move on? Perfect. And then next you are going to get to the payoff section of the ALTA. And where you are going to see on the payoff is any liens that are on title that need to be paid off. So this could be any mortgages, obviously, any home equity lines of credit, any liens that come up on title for the buyer or seller, anything that needs paid off out of closing, you will see in these columns and in this section. Obviously, like I said, if the seller owes it, it will be a debit. If the buyer owes it, it will be a debit on their side. Any questions on payoffs? That one's kind of an easier section. All right, perfect.
Can I add something about payoffs and taxes?
Of course.
just because I call this tax purgatory time.
Yeah, perfect time
really, yeah, it really sucks. Tax time sucks. So basically right now we are waiting for the counties to set their due dates for the first half taxes. You'd think that every year they would just pick a date and stick with it, but they never do. It's different every year. And they wait until usually 4 to 6 weeks before the actual due date to mail the payments, mail the bills rather. So right now what we're doing is we're holding 1.5 times the first half tax amount of what it was last year to pay this year's first half taxes. The issue with that is we're holding obviously more money than the sellers would like us to, but also most sellers who have a mortgage are escrowing their taxes with their lenders, right? So we're basically debiting them twice because they've already paid their lender to pay these taxes for them. And then we're taking the additional funds as well. So what we do is we hold 1.5 times. If they currently have a mortgage where they are escrowing their taxes, we will hold that money till the very last minute. And if the county, if their lender has already mailed in that payment, we wait for the county to reflect that payment, and then we'll just give the money back to the seller. The issue, especially in Cuyahoga County, is that, of course, they're not really on top of it, and they don't log the payments in pretty much as soon as they start getting them. And so that process is delayed. And oftentimes, in order to ensure the actual check and there's no way for us to check to see if that check was received, right? The county's like, whatever, we don't have time for that. So sometimes what we have to do is actually make a duplicate payment where we'll submit our money. Then they'll actually log the payment in from the buyer's lender or the seller's lender. And now they've got too much money. And so we do have a very good process with the county to request those funds back. So if that comes up with one of your sellers, just let us know. We'll kind of walk you through the process. But we do everything we can to avoid a duplicate payment, to the point of we literally have a runner go to the county on the due date with all of our checks. And we check up to the minute before that person leaves to see if any of those are showed as paid yet. There's really no better process. I wish there was, if it was easier with the county, but unfortunately it's not. Summit, Stark, Portage, Lake, they're all a little easier. They don't have as much volume, and they do log their payments in a little quicker than Cuyahoga. So oftentimes we don't have that issue with them, but Cuyahoga, it's inevitable. We're going to have a few where we have duplicate payments and we have to request the funds back. When we hold for second half taxes, we don't need to hold 1.5 times because we know what the tax bill is going to be, right? Right now, we know the taxes are coming due, but we have no idea how much they're going to be. They could have passed levies. They could have added assessments. There's all sorts of things that could be added. Maybe a homestead exemption is coming off, or there might have been a tax abatement that's coming off. So we have to really be cognizant of holding enough money to make sure we have enough money to collect. The last thing we ever want to do is go back to a seller and say, we didn't collect enough from you at closing and we need more. So that's kind of a breakdown on that, because we are at that time of the year. So
yeah, and I'm getting questions on it. So I'm glad you touched base on it. Thank you.
Yeah.
All right, so for commissions, this is obviously where the buyer's agents and the listing agent, their commission is plugged into here. You will also see any admin fees that you guys charge on each section as well. And I believe if you guys charge if you're getting a referral fee or we owe a referral fee, it will also show up in the commission section. Any questions on anything in commissions? Because that section's kind of easy. All right, perfect. And then we are going to get to the new loan section. This is obviously going to be if there are any loans that are taken out in this deal. So this is pretty much going to be charged to the borrower. Some things that you'll see is the loan amount. Obviously, for our demonstration purposes, it's going to be $325,000. You also see things such as application fee that the lender charges, origination fees, underwriting fees, insurance premiums, and interest on here, I believe, as well. So anything that has to do with the loan that your buyers are taking out, any fees that has to do with that, you will see under new loan. Unfortunately, they're coming from the lender. We're not in charge of them. So, you know, we are just plugging those in as they tell us to. Any questions on that section? Perfect. All right, and moving right along is title charges. So that is unfortunately our fees. Some of the things that you will see obviously right here is like title insurance, owner's insurance, all of our endorsements that we have to give that our underwriters say we do, notary fees, deed prep, closing protection letters, all of that good stuff you will kind of see broken down here, which obviously equals what our closing costs are. And I do want to say this, if you guys do run across a title company that has cheaper fees than us, please send us their prelim and we can match fees. I do just want to put that out there. If any of these, you know, you come across any fees cheaper than this, let us know and we could absolutely match. And then down here is the government recording and transferring section. And that is kind of, you know, when we take all of the documents down to the county charges us by page a amount that we have to pay. So you will see all of those fees, your recorded fee for the deed, recording fee for the mortgage, the tax you owe for just, you know, state taxes for doing this, and the transfer fee right here, which actually, you know, the county actually transfers the name from the seller to the buyer. There is nothing that we could do about those fees right here. I am pretty sure that those fees are those fees and there is no matching them, no anything. They're just standard state fees. So unfortunately, we cannot do anything about that section of the fees. And then the last but not least is just the additional settlement charges. So right here, I believe this is where Tiffany was kind of talking about the purgatory. We are holding, it looks like taxes there. And then it looks like there is delinquent taxes we put on there for $165 from the seller. So any additional charges, any additional fees that they owe that don't quite fit into any other category, we would put down there. And then last but not least is the bottom part. This is the most important. This is what your clients want to see. Right here, it clearly says due from the borrower. Sorry. Is this amount. So anything due from the borrower is right there. This is the final number that they will have to bring to closing. And then due to the seller, as you can see, there is nothing in this column because that is the buyer side. This is the amount they will be receiving. Once their mortgage is taken out, all of those fees are taken out, everything that they owe, this is the amount that will show up in their bank. And then when we do send our notary out to do the final signing, this is the acknowledgement page. Both buyer and seller need to sign this. This is just saying that they did look over it and they do authorize GM Title to disperse the funds. This is a very important part, obviously, but that is pretty much it. Like I said, it's just a receipt. It's kind of confusing to read if you've never done one or, you know, have never looked at it. But are there any questions on anything that I just said?
You could go up to the commission section, Jade. So what we do, as you guys probably know, we take your escrow letters pretty much. We don't have access to the listing agreement. Most of the time on the purchase agreement, it will tell us what the buyer's agent commission is, their percentages and or total. So we do compare that on the purchase agreement to the escrow letter, but pretty much whatever your escrow letter says is going to go here. We have had circumstances where the percentage on the escrow letter is correct, but the math is wrong, or vice versa. So we do try to always double check that. If you're giving us a percentage on the escrow letter, we will check that to make sure it all adds up to what your total is. If we do not have the percentage, we just go by whatever you put on there. Also, too, if you're paying out a referral fee, we would show that here. So we do pay out a lot of referral fees for commissions. So you would see that reflected here, as well as Jade said, your additional commission fee, which is typically starting at $199. Long story short, let's all double check our math.
Yes, please do. All right. Are there any, I know this was just a rough thing, and each deal is different, and you will see different things. And, you know, this is not a one, you know, not one Alta fits all. So you will see different things in each deal that you guys do. If there are any questions or if something doesn't add up, please let Tiffany or I know on any of your future deals, and we will be sure to either explain it or, you know, get it resolved or anything like that. But it is very important you guys look at these, make sure the numbers are right. These are humans that are creating them. So sometimes mistakes are made, and it just takes, you know, more than one set of eyes to figure it out. So if there are any discrepancies, issues, please let us know. And if there are no other questions, I am going to move right along to a CD. All right. Okay, so I am actually just going to. Okay, so what is a CD? CD is a 6-page form that describes in details the critical aspects of your mortgage loan. So the CD is more towards the buyers. This is going to kind of break down their loan in greater detail. It's going to show different aspects of the loan, such as interest rates. It's really going to go into detail more towards the buyers. It's going to show loan fees, interest rates, estimated on taxes, insurance, closing costs, and other expenses. CD was kind of created in place of a HUD, I believe. I believe this rule took place in October of 2015, and it's called the TRID rule. It's pretty much, they passed a law that said that lenders have to give buyers at least 3 days before they sign the CD and the time they close. The idea behind this is it gives them plenty of time to go over, you know, if there are any discrepancies. They were seeing kind of prior before that, buyers got, you know, their HUD, and then they didn't have adequate time to review it. And I believe a lot of mistakes were being made. So they made this rule. Tiffany, I wasn't entitled when they passed it. So I don't know if you want to kind of explain anything further than that, but when I was doing my research, this is kind of what I came up with.
Yeah. So basically before this, we had basically a HUD, which looks very much like the Alta. It was a little more detailed. It was several pages long, not just the standard form. I will say that the idea behind this was great, right? Like every buyer would love to have their dollar figure 3 days prior to when they actually sign. How many of you have ever actually had that happen though? Almost never, because the law doesn't actually state that the 3-day CD has to be accurate in any way, shape, or form. It just has to be given to them within a certain parameter of the fees that were issued to them at their initial loan application. So when the government passed this rule, I think they had good intentions, but it didn't solve the issue at all, because we still don't get loan instructions or documents definitely 3 days before closing. So yeah, it was a great thought, but it really didn't do anything other than I think the biggest thing it did do is predatory lending obviously was a huge issue prior to 2008. And a lot of times people would get to the table and their interest rate would be different. Their terms would be different. This has put a stop to all of that, which is very good. But actually having a CD, an approved CD with the amount that you need to know before closing, 3 days before closing, almost never happens. Because again, the 3-day TRID rule does not actually state the CD has to be accurate. So there's that.
There's that.
Yeah, but it is very important that your customers, when they get the 3-day CD, that they look at it, they make sure the terms are good, they make sure it looks reasonably accurate as far as the fees go that they can recall, and they sign it as quickly as possible, because if they do not, then it will delay their closing.
Thank you.
Mm-hmm. I was on maternity leave when they passed that, and I was thankful.
I was thankful.
It was a mess.
All right, so the sections of the CD are kind of loan terms, projected payments, closing costs, loan costs, other costs, cash to close, summaries of transactions, loan disclosures, and the contact info. I am going to show you guys what it looks like. All right, so this is what a CD looks like. You guys have probably seen this, obviously kind of same as the Alta. All of your information is going to show up right here. Disbursement date, closing date, all of that good stuff. So as I was talking about, here are your loan terms. What you're going to see here is the loan amount, so how much you're taking out, the interest rate, so the fee that the buyers are going to be paying the lender at what percent. The monthly paid interest is the interest and principal loan amount you'll pay each month. The prepayment penalty, a lot of lenders, I haven't seen a lot of lenders do this, but if you were to pay the loan off before your years are up, sometimes there is a penalty to that, but I don't see in very many deals that a lot of lenders charge this. And then a balloon payment. It is a one-time payment, from what I understand, that is due when your loan has been paid off. Is that correct, Tiffany?
A balloon payment is when there's, let's say it's a 5-year balloon. A lot of like doctors and things will do this. So essentially they have a certain term for the balloon. Once the balloon's essentially pops, which is why they call it a balloon, you basically owe the amount for the mortgage.
There you go.
It's very similar. If you have any customers who are currently in, what do you call it with the pandemic? If they are in, where they put their payments on hold, there's 2 different kinds of holds they can do. One of which is a balloon payment, where some lenders will take those payments and just tack it on to the end of the term of the loan. Other lenders will require full payment of all of those missed payments upfront as soon as the balloon pops, essentially. That's kind of how that works.
Thank you.
It's very rare to see balloon payments.
Yeah, I've never seen one. I actually had to kind of research what it was.
It's very rare to see adjustable rate mortgages. And usually, again, those are high, high loan amounts, high purchase prices. Oftentimes, usually when we see them, they are doctors who they know they're going to be in town for, only 4 to 5 years. They know they're going to sell that house before the balloon comes due or before the rate is adjusted.
And then in the next section, it's going to be projected payments. This section breaks down the major components, I guess, of your mortgage loan and displays how the payments change over the years. So it's going to have the payment calculation right here. It's going to have your principal and interest. So how much interest you're going to accumulate over your payment of the years. Mortgage insurance, estimated escrow, and estimated monthly payment. So all of these are going to calculate into how much your mortgage you're going to pay each month. Down here, you're going to have estimated taxes and insurance assessments. Tiffany, do you kind of want to get into this part as well?
Sure. So most people who finance a property, they will escrow their taxes and insurance. That way it's just included in their monthly mortgage payment and they don't have to worry about paying those out of pocket. So here is where it would check that they are escrowing taxes and or insurance. It would give them the amount. And then over in the right-hand corner where it says in escrow, if they had checked yes, then it would say yes.
And then this is costs at closing. So down here is going to be your closing costs. So it's going to actually calculate and break down exactly how much, this much in loan costs, this much in other costs. So, and, any credits you have, it's going to break down exactly what you're paying in closing costs. And this is exactly what it is. So this is going to be all title fees, all lender fees, all recording county fees, everything like that. And then cash to close is going to be how much you have to bring to close, which includes all of the closing costs and the agreed down payment. So let's say you're putting $20,000 down, plus all the closing costs. This is going to be how much you have to wire to be able to purchase the property. Are there any questions on the first page of this? Or in regards to the TRID or anything like that? Okay. And then it's going to kind of break down into loan closing costs. So this is going to be all of the closing costs right here. This is going to be broken down. So this is going to show exactly what you are paying for. A loan origination charges. This is going to be a lender fee. Loan amounts of points. There's nothing here. The origination charge to start the loan. These are pretty much all of lender fees right here. This is going to be for your appraisal, for the bank pulling your credit reports, flood certification, and an underwriting fee is what you are going to pay here. Again, I believe this is for the lender as well. Correct, Tiffany?
Correct.
All right, so these are all lender fees. And then down here are all of our title fees. So in section C, services borrower did shop for, you are going to see all of our title fees. And I'm not going to go through this again. This is kind of the section that that was shown on the Alta in the previous section. So all of our endorsements, all of our notary fees, our deed prep. As you can see, we have the delinquent taxes right here. Closing protection coverage, all of that you will find in section C. And total loan costs is section A, section B, and section C are all combined. As you can see, section A plus B plus C equals $5,335. So pretty much all loan costs are just title and lender fees from what I can see here.
Mm-hmm. Correct.
Is there any questions on that section, on either one of those? Perfect. All right. So then we're going to get into other costs. Other costs are, as we discussed, the government fees, the county fees. Unfortunately, there is nothing that we can do about these. They are state standard fees. So you're going to have your recording fees for your deed and your mortgage. $42 for the deed and $218 for the mortgage. Again, this number is calculated by the number of pages that we are recording. So, just depending on how big the package is, you will see that number kind of fluctuate for the mortgage at least. Tax stamps, this is the transfer fee. So taking it from the seller's name and putting it into the new buyer's name, and then just state taxes right there.
So pretty much every county in Northeast Ohio charges $4 per thousand. So if you have a $100,000 house, you take 4 times 100, and that's how much the transfer tax is at the county level.
Learn something new every day. Look at
that.
Yeah. And then for prepaids, the section F right here. Tiffany, do you kind of want to go into the mortgage section? Tiffany was a lender, so she knows kind of more about the lending side than I do. I'm just title, so that's why I'm asking her to kind of jump in on that.
Yeah, no problem. So F and G are essentially prepaids or impounds, or sometimes you'll hear people say escrowed fees. This is where they'll pay the homeowner's insurance 1 year up front. They'll collect a certain amount of homeowner's insurance and or taxes to be escrowed and basically start that escrow account I was talking about earlier in the CD, where the lender pays the homeowner's insurance and the taxes for them. Also here, they will collect the interest. So again, I'll use the example of, in this case, we're closing on 12/27. the lender is going to collect interest, which is $12.43 per day. They're going to collect those days and basically pay themselves the interest from the buyer for those few days before closing, before the next month starts. If you're closed, that's why a lot of closings happen at the end of the month. A lot of people don't really realize that, but of course it's going to lower the buyer's closing costs if you're closing towards the end of the month, because they're not paying that almost full month of interest to the lender. Also, a lot of different loan types, you get to skip a month of payments. So it's very helpful for buyers to save them money. In G, this is the escrows or the impounds or the prepaids. So here you would collect they're collecting $40 a month for 3 months for the whole HOI. There is no PMI in this case, but if there was, it would show on item G line 2, and item G line 3, you'll see we're collecting 3 months of property taxes at $650 a month. That's a lot of taxes. So hopefully it's a really nice house. And then it shows the total there. And essentially it starts those accounts again for the escrows with the lender. That's kind of it there.
Any questions? Perfect. And then in section H, you are going to see others, which are taxes, it looks like. The amount we're going to hold, since Tiffany kind of said it looks like we are going to hold because we are in that tax purgatory time, as well as our commissions that we discussed. So listing agent commission, selling agent commission, any referral fees, and any admin fees.
A lot of times you would see here location survey as well, water and sewer charges, water and sewer holds, anything out of the ordinary that's not realtor or lender or title related.
And then section I is section E, F, G, H, all just combined. So that is the total you are going to get from there. And then it just kind of, you take section D and I and you add them together, and that is their closing costs. So they give you your closing costs, they break it down into sections, and then they take those sections and literally itemize, line them so that you could see exactly what you are paying for. And then calculating cash to close. Once again, Tiffany, I'm going to ask for your help to better do this because it's a lender one.
It really just takes, you'll see the closing costs, the down payment based on their loan type, minus any credits they get to the seller from the seller or any other adjustments, and then it shows them their cash to close. Essentially, this is just the section that does all the math for the buyer, right? They don't have to figure it out themselves. The previous form, it really didn't do this for them, and it was kind of difficult for them to understand, oh, this is a credit, this is a debit. What was my total closing cost? What were my total closing costs minus any credits I got? So this really breaks it down for them nicely. And that's their cash to close.
Perfect. And then the summaries of the transactions, again, just
this is yeah, this is very similar to the Alta.
Yes.
Or the previous HUD. So it reads very much like that. It reads like the first page of an Alta.
Perfect. So as you could see, just once again, kind of breaking everything down. And then what most people want to see, it's just a different form of it. So you could see cash, it'll either say from or to the borrower, or from the borrower in this case, this is how much they're going to have to bring to close. And this is how much, again, the seller is going to be profiting from this sale. So pretty much it's kind of the same deal. It just looks a little different than the Alta.
I'll make a note that lenders oftentimes request a preliminary CD from us, usually right away. We usually get those out within 24 to 48 hours of opening an order. We also send sellers a preliminary CD pretty early in the process, as long as we have everything we need from the realtors, meaning the escrow letters. Also, every buyer and seller gets a copy of their CD and or Alta prior to signing. Every realtor gets a copy of the CD showing the commission checks section prior to when we close as well. So you will have every opportunity. Now it might be pretty close to the signing again, because we may not have all the escrow letters, or we may have not gotten everything we needed from the buyer's lender quick enough. So it might be pretty tight on timing, but you will always have the opportunity with us to review your commission and any of the other items that, you know, might be necessary prior to signing. If you know that there's a point of sale hold and you don't see it on there, ask us. You know, maybe we didn't get the letter, or if you know that the seller's paying $5,000 in closing costs, but the original contract said $2,000 and there was some changes, maybe it didn't get plugged in correctly, or maybe we didn't get the addendum, or, you know, so if there's anything you want to review, we highly recommend you do as well. The more eyes, the better.
Yes. And then low disclosure section, this is just kind of the terms of the loan. So every, you know, all of your terms will be checked off in here if it applies, or it won't if it doesn't. Loan calculations. This section kind of just shows how much your loan will cost you over time. It'll, yeah, just summarize the payments over time, correct, Tiffany? As far as my explanation, that's really what it means.
Yep.
The other disclosures right here, this section, you'll find general information about their appraisal, contract details, refinance information, and tax deductions. It kind of details if you're liable for the unpaid balance if it were to ever go in foreclosure as well. That's where you'll find that is foreclosure information right here. And then that last contact information. So here, who your lender was, where their address is, who the title company was. Obviously, either one of your guys' informations will fill this column here, mortgage broker, all of that good information you will find at the bottom. And then again, they just have to make sure the buyer has to sign this, and that is pretty much the CD.
I think it's important to note that we do prepare a CD. However, this CD is actually a lender document.
Yes.
The CD that is signed at closing by the buyer is a lender prepared at the end of the day. So prior to TRID or Dodd-Frank going through in 2015, the title company was essentially responsible for the HUD or closing statement. Although we are somewhat responsible for it, I will note it's never final. There are things that change. There are things that get missed. There are things that get added or taken away. But in addition to that, more importantly, this is a lender document. The lender is required to provide this document. We give them pretty much everything they need outside of the loan fees to plug into it. We have to make sure whenever you're talking to a title company and they're telling you we're balancing the CD with the lender, that is what we're doing. The lender sends us the closing instructions. They send us their CD with their fees on it. We plug everything else in. We send that back to the lender. They update it. It's a very back and forth process, unfortunately. It's usually pretty quick, depending on who the lender is. Like cross country is super fast. But if you're hearing balancing the CD, that's why, because we are truly balancing it. And the CD that is signed at closing is a lender document. They are responsible legally and financially for any issues with that CD, because they are the ones that are ultimately responsible in the eyes of the government for the loan, if that makes sense.
Yes.
I can't think of the department of what they're called just now.
So yeah, that is the CD pretty much, and the Alta. Like I said, one like this, just because one does not fit all. So there might be differences between this one and one that you guys see to your clients based on when you guys are closing, terms, many, many different things. So are there any questions on anything that we went over today? I know it was kind of general and an overall view, but all right.
That's good. Yeah. I would just say, guys, whatever you know is going on with the transaction, just look at kind of those bullet points: purchase price, your commission, your admin or additional commission fees, point of sale, anything that's out of the ordinary of a regular purchase. I would just quick take a look at it and say, okay, that looks good. We're good. Yeah. You do get it before closing for that reason. Make sure your math is right. Make sure our math is right. And then, you know, the less issues everyone will have.
Absolutely. Absolutely. All right, guys. Well, thank you so much for coming. And if you guys have any questions that you could think of that we didn't cover, or maybe that you didn't think of while we were here, please reach out to Tiffany or I, and we are more than happy to answer them. But other than that, I hope everyone has a great day and take care.
Thank you, Tiffany and Jade.
Bye, guys. Have a good one.
Take care, guys.